All right. So today we're going to talk about the dreaded CRA audits, something that everybody's so afraid of. It keeps people up at night, and the amount of stress it can cause is unbelievable. So today we're going to tackle that subject, and we're going to talk a little bit about how to avoid getting noticed, first of all, and getting those nasty audits. And then we're going to also tackle what to do if you do get that letter or that call. So the first thing, let's talk about how to avoid getting audited or getting on their radar. Based on my experience, I've noticed that a good portion of the clients who get audited, and I would go as far as saying 90 to 95% of the clients who get audited, the reason they get audited is because they are not complying with everything that CRA is asking for. So, for example, make sure your GST returns are all filed on time. Make sure your employee remittances are filed on time. Your corporate tax return, personal tax returns, all of that. Make sure those are always current, on time, and by all, as much as possible, all paid on time. So basically, you want to stay off their radar. And if everything is filed on time and paid on time, the odds are of them noticing that you even exist goes down big time. So by doing so, you're probably reducing by filing everything on time and paying everything on time as it relates to CRA, and that would also relate to PST, provincial sales tax. If you keep filing things on time, the likelihood of you getting audited goes down. Oh, I'd say as far as 90 to 95%. It is huge. So now for the other 5 to 10% who still get audited, you might be wondering, well, how do I reduce those risks? There may not be a whole lot that you can do there to reduce the risk of getting audited beyond filing everything on time. Because based on what I kind of learned over the years and what I know, is CRE seems to have these projects every now and then. And what a project looks like is they're going to pick on something and they're going to say, we're going to review all clients who have whatever. So they might decide today we're going to review all clients who have no hair. I'm exaggerating, but they'll pick on something and then decide to audit all clients who fit that particular criteria. So, for example, they had a project not too long ago about reviewing employment expenses and things like that. So, and there's not much you can do to avoid getting audited if they're on a project. So, if you're wondering how they pick your name, sometimes it might be because it's part of a project. The other thing that can be is just if they see any anomaly, things are not normal. I'm not going to anomalies. No, that's not the right word. Whatever. You get what I'm trying to say. Anyways, so for example, several years ago, I remember there was an electrician that got audited. And in discussing with the auditor, I asked them, well, what prompted you to review this particular electrician? And they explained that the revenues of that company had gone down dramatically from the year before. And so and in this case, it made perfect sense because they were on the way towards retirement. So the guy was saying, well, I'm not working as many hours. I'm going to cut down my clients and cut down the work that I do. And his decision to go into retirement mode resulted in his company dropping revenues by about 50%. So CRA found that strange that his revenues would drop by such a huge percentage. And so what they were looking for is to see whether or not the client had possibly other revenues that he was doing under the table. So those are the kind of things they're going to look for. Anything that looks kind of strange, anything that looks weird by way of transactions. So for example, if you're an electrician and your revenues are, let's just say 100,000, and now in 1 year, your travel expenses are 50 grand. Like I said, well, that's kind of weird that a company that only does $100,000 of revenues would have $50,000 of travel expenses. So those are the kind of things that could prompt them to take a closer look at your file and decide to audit you. So now that we've talked about how to possibly avoid it and what kind of brings up audits, I want to spend a little bit of time about what to do when you get that dreaded call or that letter. And by the way, they will never just show up at your place. And that's a fear that I've often heard clients, well, what if they show up at my door? They won't. They never just show up at my door, not at least in my experience. They will, however, almost always send you a letter or a phone call advising you that you are getting audited. So once you receive that letter or that phone call, there's a few things that I think are important to remember. Number one is be nice. It can sometimes be extremely challenging to be nice to an auditor who's out to get blood. So sometimes it's counterintuitive to be nice to such people because you just want to slap them. But basically, you got to remember that they're just doing their job. There are people just like us, and they're basically being asked to do something that is not a very pleasant job. So I always recommend be as nice to them as you can possibly be, and because that will go a long ways. And let's face it, if you're being difficult to the auditor, there's no much motivation for him to go easy on you. And if you are going to be treating him like a bad egg, well, you can bet your boots. If I were him, I would probably be a little bit more aggressive in coming after the client who's treating me poorly. So be nice. The second thing is don't volunteer more information than you need. So if they're not asking the question, don't give them the answers. Because getting audited is, in my opinion, a lot like getting arrested. What you say can and will be used against you. So talk as least as possible, answer their questions, answer them nicely and honestly, but do not volunteer more information than you need to. So along those lines, we strongly recommend that, and we could recommend that to our clients. If you get a call from CRA, we are almost at a point we forbid our clients to talk to CRA. And we strongly, strongly recommend that our clients tell CRA to talk to us. So in other words, if you get a call from CRA or you get this letter, first thing I would do is tell them that you have an accountant and that you would like your accountant to represent you and provide them with all information that they may need. So try to avoid having any communications with CRA as much as possible and refer them directly and quickly to your accountant and let them take care of it. And there's two special reasons for that, or several, but the most important one is you got to remember that in all likelihood, you have probably never had the experience of dealing with a CRA auditor. So it puts you at a disadvantage because you've probably never done that in your life. And the people who have will probably only do it once and twice if you're unlucky. But it's not something that a lot of people have much experience in. Whereas accountant, well, we deal with CRA auditors all the time. So we are more likely to be able to provide them with just the information they need and in a fashion that is more efficient. The other thing that's good about having an accountant represent you is there's less chance of bad information leaking through to the CRA auditor. And I've had tons of clients who got themselves in trouble because they just volunteered too much information, but they even said things that weren't exactly true to the auditor that kind of put them in a pickle and now made it very hard for us to defend the client because we had now to prove them what the client was saying was not exactly true, that the fact actually remained over here. So the less you can talk to them and let your accountant take care of it, the better it is for you as the person getting audited. So generally, the steps that follow and how an audit occurs is, first thing that's going to happen, you will get that call or that letter, and like I said, they never just show up. Once you get that letter will usually provide you with a list of information they need. So they will say, we would like to see all your bank records, all of your receipts, canceled checks possibly, and credit card statements, all of that. And of course, they'll usually want to see your bookkeeping. So you'll need to provide them with a print off or a digital format of your bookkeeping. So the list will come to you. And that's where we usually recommend to our clients, well, bring the list to us and let us compile all of that information on behalf of the client. So when we're dealing with our clients, we'll tell our clients, here's what they want, bring it into us, and we will provide this information to CRA. Once CRA has all of that information, then they will usually, and most of the time, it depends. Sometimes they will ask that you send it to them and they will do the audit at their office, but it's not uncommon for them to do the audit at the place of business. So again, because we want to avoid you having any contact, we try to have our clients not have the auditor do the audit at your place of business, but at our office. So that's why we tend to recommend bring the information to our office, and then we'll invite CRA at our office, and we'll sit them down at a really nice desk and let them do the audit at our office. Once they're done with the audit, almost invariably there will be some questions, and they're going to come back to us and say, okay, can you explain why the person has $500 of flowers every month? So those are the kind of questions they may have for which we need to provide an answer. Now, it's not to say that as an accountant we'll have all the answers. And the beauty is that as an accountant, we can easily say, well, I don't know the answer to that. I don't know why the client is spending $500 of flowers every month and putting it under advertising, but let me find the answers and I will get back to you. So what we do as accountants, we will compile all of these questions, and then once the auditor has left the building, we will call the client and ask all of those questions so that we can forward the proper information to CRA. Now, the beauty of that is that sometimes there may be some questions where you need some time to think about it, and you may be tempted to panic. But the beauty, if you're talking to your accountant rather than CRA auditor, it's easy for you to say, can I think about that and get back to you? And we're okay with that. So again, it takes the pressure off of you by having an accountant stand between you and the auditor. So after the questions have been answered, CRA will then make a determination on how to assess your return. And so they will take all of the information and they will deny or accept some of the arguments we may have made. And then they will come up with a reassessment. So that, in other words, they will send you a bill for the difference in taxes owing because of the adjustments they will have made. Once you receive that reassessment, you now have 90 days for which to make a decision as to whether you simply accept it and you pay it. And if you don't like the result and you would like to fight it, then what you do is you file something called a notice of objection. And this notice of objection is a really simple form, relatively simple, where you're saying, well, I don't agree with the assessment and I would like to go to appeals. What happens then is that two things will happen. One is all collection efforts will cease. So in other words, obviously, if they've reassessed your return and now you owe $10,000, collections will come after you. But once you file the notice of objection, collections will lay off. And they will stop trying to collect until appeals has done their job and you have presented this to appeals. Now, it's not to say that you should not be paying that amount. So let's say you get a reassessment for $10,000 and you disagree with that reassessment. I'd still be tempted to pay that amount if you can and if you have the money. Because if you go into appeals and lose, then what will happen, it'll go back to the collections agency and they will tack on the interest for the entire year while this thing was in limbo. And now you're going to be stuck with paying all of that interest on top of the $10,000 bill. So, and you paying the bill does not tell CRA that you agree with them. You're just simply paying it off to avoid the possible interest that would come should you lose in appeals. So it has no impact on how they will judge in your appeal. So appeals usually happens about a year after you filed a notice of objection. So you filed a notice of objection, usually within a few weeks or so, you will be getting a letter saying they've received your notice of objection, and they will usually tell you that they will be in contact in due time to review your appeal. And as a general rule, it's often close to a year before they finally get back to you. So they are obviously quite backlogged. So now in appeals, what happens is you are allowed to present your case once again and say, I disagree with the auditor on whatever basis. And usually this is where we tend to take a look at possible court cases that have happened in the past that we can use as a precedent to defend your case, or maybe the way that the Income Tax Act is interpreted. So in other words, just looking at the wording of the Income Tax Act, sometimes we can find, I don't know if loophole is the right wording here, but you can find a way to get around in reducing the amount of taxes that you owe. So we have now gone to appeals. We make our case to appeals, and the appeals officer will come back with a judgment of some kind. So let's just say that initially you owed 10,000. One of three things will happen. They will accept your arguments and reduce the bill back down to zero, or you will have a partial win where they're going to say, well, you owed 10,000, now you only owe 7 because we accepted your argument for $3,000 worth of expenses. Or they may say, no, we rejected it totally, and the amount of $10,000 still stands as is. So if you get a partial win or a complete loss, you have the right now to go to court. So now we're stepping it up quite a bit. So basically, instead of presenting your case to a CRA auditor who is, or rather to a CRA appeals officer, you are now standing in front of an impartial judge. So what happens when you go to court is that you will present your case to a judge, and CRA will have their own people over there, usually lawyers, who will present their case in front of the judge. And the judge will then slice the question as to whether or not they think you owe money, whether your case has merit or not. Interesting thing about going to court, a few things. One is you have three options when it comes to going to court. Option number one is to hire a lawyer, which is something I sometimes recommend, especially if it's fairly complex rules. A lawyer will know the income tax better than anybody. A tax lawyer, I should say, will know the tax rules better than anybody, and they would probably be best suited to defend you against a CRA auditor or a CRA lawyer. The second option, obviously, is to have the accountant represent you. I'm not a fan of that, simply because accountants are not used to going to court, and they might not be the best people to defend you. The third option actually is to go by yourself. And I've had several clients who have gone without representation at all and have come out of that quite nicely. And what was interesting in all the stories that I've heard of people who represented themselves is that the judge, as a general rule, will, I wouldn't say have pity, but they want a fair case. So they will kind of act a little bit on your behalf to make sure that you've got a fair case of presenting your case properly. So that's not an entirely bad option as well, as to just simply represent yourself. And the beauty of that, I guess, is that it brings your cost down to nothing because you don't have to pay a lawyer or anybody to go to court. So, and the other thing that I've heard, and this is I've heard from other speakers, is that of all the court cases that are presented to go to court, only a small fraction only really make it to court. That CRA is often willing to negotiate deals. And I've seen that in my own practice where a client was prepared to go to court, and just before the court case date, CRA comes out with a proposal, says, tell you what, how about if we agree on a certain amount, which was agreeable to the client. And CRA will often do that, simply, I think, keep costs down to some degree. And the other thing I think is that they're not too thrilled about going to court, because if they lose, now they've got a precedent that can be used against them in all future court cases. So it is quite common, and the reason I'm not exactly clear, but it is quite common for court cases to be settled out of court, so which is not a bad thing. And of the course cases that go to court, well, it's not always a win for either party. It seems to be fairly evenly divided from what I heard. So again, so if you lose it, you don't like the results of the audit, and then you go to appeals, you don't like appeals, you can go to court. And if you still don't like what the courts are saying, then you can even appeal that, and you can go up to the courts And of course, every time you do that, it becomes more and more expensive on your part. So those are kind of the steps that relate to going to getting audited, and what happens if you do get audited. So in summary, if I were to now summarize what you should take away from all of this, one is file everything on time and pay everything on time. Keep CRA off your back. Do not make any waves. Do not attract any attention. Do everything on time as best as you can. Number two is maintain excellent books. I found that CRA, as a general rule, will tend to be better whenever your books and records are in really good shape, and tend to be a little irked when they're not, and therefore be a little less favorable, that I found. So keep a good set of books, and I think the auditor as well as the accountant would appreciate you having a good set of books. So if you're incapable of keeping good books, consider hiring a bookkeeper, a really good bookkeeper to do the books for you. Number three, hire a good accountant. And so hire an accountant who knows the rules, who can provide you with proactive solutions to all of your tax problems, and someone who can be a bit creative. And creative doesn't mean that you're breaking the law. Creative means that the person is capable of taking a look at the Income Tax Act and finding solutions within the Income Tax Act to have you reduce taxes. And sometimes that does require a little bit of creative thinking on behalf of the accountant. And a question I often I get asked is, well, how do I know if my accountant's any good as far as helping me with my taxes? Well, I'd say, well, there's a few things you should look at that I can think of. One is take a look at their education. So if they come back with tremendous amount of education, that's a plus. It's not a guarantee, because I think we all know people who have tons of education who know nothing. But let's face it, a good education in the accounting and the tax world will probably go a long ways in being able to represent you well. The other one, take a look at the years of experience. The more experience the accountant has, the better are the chances that that person will be able to help you and really be of service to you. And the third thing is research it. In other words, look at the reviews, look at Google reviews, ask the people who deal with that person how good they are, because that will give you some insight as to whether or not the accountant is worth hiring, and would be a good way to defend you should you ever get audited. So those are pretty much all that I've got. I forgot to mention at the beginning, if you had any questions, you should send them in. I'm hoping by now there's a few people who have listened to this live show a few times and know that they are open to ask questions. So Kayla, I'm going to send it off to you. Do you have any questions from any of the attendees?
Hey, Jean-Guy.
Hi.
We got a great question from Danila.
Okay.
If you get audited in just one expense category, but it's not always the same category multiple times, is this a coincidence, or is it an indicator of a bad name with CRA?
Okay, can you read the question again? If you get audited?
So if you get audited multiple times,
yeah,
but it's only ever in just one expense category, but not the same category, is this a coincidence, or is it maybe an indicator of a bad name with CRA, as in, have they marked your file, or are they out to get you?
Based on my experience, CRA doesn't seem to have a blacklist of all that much. Everybody thinks they do. If they do, it's not evident to me. I suppose it's possible. And again, it boils down to filing things on time. But if you're filing everything on time, and maybe I should point out that there are different levels of audits. So a lot of people saying, well, I got audited. Oh, really? What happened? Well, they asked for my donation receipts. Well, no, that's not an audit. They're just asking for your donation receipts. And what I consider an audit is when they come into your books and records and want to review a whole crap load of stuff. That's an audit. But it's not uncommon for CRA to simply do a review of a certain expense. And I'll give you an example of that. I'll go back probably 15 years ago. I got asked for my donation receipts. I sent them all in, everything matched up. The year after, they asked my donation receipts again. I sent them all in, everything matches up. And I think it was for like 5 or 6 years in a row, they kept asking for my donation receipts. And I'm thinking to myself, for crying out loud, haven't they caught on to the fact that I know what I'm doing and I'm presenting the proper amount for donations every year? So obviously, something like that had to have been nothing more than a coincidence or a random thing, because it would have been different if I had provided them with receipts that did not coincide with my tax return. Then I can understand why they would want to audit that year after year after year. But in this case, I was bang on every single year, and every year they came back asking me for receipts. And I've even had clients come into me thinking that I'm doing something wrong. Says, you must be doing something wrong because you keep asking me for receipts. Well, we don't have that much control, and I doubt that they go after a client says, oh, they're getting their taxes done by such and such an accounting firm, so we're going to ask for this, that, or whatever. I don't think that happens a whole lot. I'm not saying it doesn't, but not much. So it probably is a coincidence.
All right. That's great. So that looks like all the client questions we have right now, but you gave us some great information on working with accountants.
Yep.
Does it ever happen that CRA won't work with an accountant, or they refuse to work with an accountant?
Sometimes they will give you the sense that they don't. So I've had more than once, in fact, where the client got a call and they had been warned. Like, if you ever got a call from CRA, do not whatsoever accept to meet with them under any circumstance. If they call you, have them talk to us and we'll take care of it. And so more than once we had clients call me up and says, look, I told the auditor I didn't want to deal with them. I referred them to your firm and they refused. That is uncommon, and it's not really allowed. If you are saying that you want to be represented by an accountant, CRA really has no choice but to work with the accountant of your choice. So sometimes, I'm not too sure why that happens. And I remember one time it had happened, and I brought it to the auditor's supervisor, and the supervisor was not impressed. So my thinking is that it's one off. It's not supposed to happen, but it can. So like I said, if you ever get pushback from the auditor refusing to work with the accountant, keep pushing back, or call the accountant and say, look, they're not cooperating, and let the accountant deal with it. And we can call the auditor and say, hey, look, you talked to our client, leave them be. I will take care of them.
Perfect. That's really great information. What kind of costs are involved with having an accountant defend you?
That all depends. By and large, usually $500 will get you very close to getting it settled for at least the first part where they get audited. And basically that $500 will consist of us going over the letter that CRA has sent you about all the information they need. And then depending on how much help the client needs in compiling that information, that will play a part as to how much our fees are going to be. And then, of course, there's some auditors who come in and it is sweet as can be if the books and records are in really good shape. And I've seen that happen a multitude of times, where the auditor comes in, we set them up in an office, they come out of there 4 or 5 hours later, or even 10 hours later, and say, look, we've got nothing. It's all good. We're good to go. Well, then in those cases, our fees are substantially less. But there are times where they come out of there and they say, oh my God, it's a real hornet's nest. And here are all the things that I found. And I've got about a gazillion questions. So needless to say, if they've got a gazillion questions, our fees in taking care of the audit and then coming back with all the answers will increase significantly. So it can vary quite a bit. But generally speaking, it'll vary between usually $300 and $1,000. I'd say a lot of them will fall around the $500 or $600 mark, and it all depends, like I said, on the audit. And even at that, I say a top is $1,000. We've had some audits where the client got, we were just continually having to provide more information to the auditor, and especially in some cases